On today's episode of the Cryptoverse, I would like to talk about Ethereum mining is no longer profitable. We'll take a look at this analysis and then decide for ourselves. The IMF, International Monetary Fund, is open to the idea of central bank issued cryptocurrencies and have issued a 39-page report on the subject. Twitter continues to lack in the security department, allowing Google and Target's Twitter accounts to be compromised in a Bitcoin giveaway. And we'll check in with the markets and we'll get some updates on those trades that I've been kind of providing live commentary on. So timestamps for all of that are down in the video description if you want to skip ahead. If you're new around here and you would like to know how to get rid of the ads, support the show, and earn cryptocurrency rewards on a daily basis, please visit thecryptoverse.show. Click on that big blue button that says Get Paid to Watch, and they'll explain how to get rid of the ads, support the show, and get paid cryptocurrency rewards every day. You can also click the link below if you want to go straight to the site without typing it in. For now, though, we're going to get into the content. So the first story is that a US technology firm called Susquehanna says that mining Ethereum with a GPU is no longer profitable. And this was a story that was reported by the Cointelegraph yesterday. So let's talk about this. I can't vouch for this myself is the first thing to say, since I don't run any GPU mining rigs myself. However, what I do know is that Ethereum ASICs, such as the Antminer E3, are out in the wild now. So whenever an ASIC is released for a proof of work coin, historically that has signaled the death of mining with regular graphics cards. The only exceptions to this are maybe Monero, because the community decided to do a hard fork and change the mining algorithm specifically to increase ASIC resistance, you could say to punish ASIC users on that network. And it worked. It's only going to be a temporary solution, mind you, but it did work. So this headline doesn't make total sense to me, because it actually says, if we read it again, it says bear market and declining hash rates mean mining ETH no longer profitable. Well, declining hash rates meaning mining ETH is no longer profitable, that's the bit that doesn't actually make total sense to me, since declining hash rates translates to lower competition and an increase in profitability. If there's less competition, it makes it more profitable for the remaining miners. Maybe they mean declining mining rewards or something like that. In any case, the fact is that the game theory of proof of work mining is set up such that those who can no longer mine profitably get taken out of the game. So that does lower the hash rate, which also decreases the difficulty and decreases the cost of mining until the remaining group of miners can operate profitably. So while initially that headline might give rise to thoughts like, oh no, is Ethereum going to die? The fact is that this is all perfectly normal in the dynamics of crypto mining in the proof of work world. And as we know, within the next couple of years, the plan is for Ethereum to gradually transition away completely from hardware-based mining. Next story. Have you ever heard of a CBDC? Well, I hadn't recently, but it stands for Central Bank Issued Digital Currency, which the head of the IMF says there could be a case for. So this is another article from the Cointelegraph. Central bank digital currencies could have a legitimate role, says IMF's Lagarde. We've spoken about Christine Lagarde a few times on this channel. Whenever she's mentioned, it's usually in the context of her being open to the whole crypto assets idea, and she is currently the managing director of the International Monetary Fund. So the IMF is supposed to work with its 189 member state countries to foster global economic growth and stability. That's the official line. Now, in the past, this has meant things like lending money to countries who are in financial difficulty. So Christine is quoted here as saying, in a speech that she gave, that the international community should consider endorsing central bank digital currencies. You may actually recall Monday's episode of the Cryptoverse, where I reported on the new Iranian stablecoin that was to be issued by their central bank. And yes, Iran is a member of the International Monetary Fund. I bet you never thought Iran would be leading the pack on global fintech innovation, did you? Anyway, this goes much deeper than a casual speech by Christine Lagarde at the FinTech Festival in Singapore. The IMF have actually provided us with a 39-page PDF report called Casting Light on Central Bank Digital Currency. Now, I did not have time to read this entire report, but it's there if you want to get deeper into their thinking on this. Next story. Fake Bitcoin giveaways from hacked Twitter accounts continue to hit the headlines when you see stories like this. Target Twitter account hacked by Bitcoin scammers, as reported by Bitcoinist.com, and Google's G Suite Twitter account compromised to promote 10,000 Bitcoin scam. So these scams kind of follow a similar structure, right? Suddenly, the hacked Twitter account announces that like Target or G Suite are now accepting cryptocurrency as payment, and then they say, to celebrate, we're going to do a cryptocurrency giveaway, usually Bitcoin. They then tell you to verify your Bitcoin address by sending them a Bitcoin transaction of anywhere up to 1 Bitcoin. And then once you've done that, you'll get double back, or whatever it is. So that's basically greed combined with ignorance. Two problems which I'm addressing in my new security course that I'm creating that's directly addressing problems of, cryptocurrency and blockchain security. So the whole course is dedicated to that. And when I see stories like this, it just reinforces that this is the next thing I need to do. So stay tuned for the launch of this new course. Now, one huge flaw that I see here is Twitter's security model. Yes, they do support two-factor authentication, but when I check this on my account, they only offer SMS, which is the worst type of two-factor authentication in my view. I want to see FIDO authentication so that I can then secure my Twitter account with my Ledger hardware wallet. Or at the very least, I want to see Google Authenticator as a two-factor authentication option. Will the average user use these? No. But these hackers, they're not interested in individual user accounts, right? They hacked into one of Google's Twitter accounts. And I'm pretty sure that Google's G Suite team can figure out how to use the Google Authenticator. But they can't because Twitter don't offer it, right? Mildly infuriating to me, I'll tell you. But rather than just complain about it, I'm doing what I can do by creating this new security course so people can protect themselves from this kind of thing by being informed, which doesn't actually require the cooperation of the likes of Twitter, which is always the best thing. On to the next story. We're going to go over to the market roundup now. You remember the other day when I said if Wax pulled back to 10 cents, I might have a go? Well, let's look at what we have here. If I bring up the Wax against the US dollar, look at this. 9.5 cent Wax as of right now. Kind of interesting. Someone must have dumped an almighty amount of Wax was my first thought for it to gap like this. Gapping doesn't really happen in crypto except when there's extremely low volume. Now I say an almighty dump. However, if we turn the volume on, that candle where we see the gapping in the price, well, the volume is kind of below average, so I can't actually explain that. I'm glad this did pull back to where I wanted it, but the gapping kind of scares me off. It kind of scares me off going in because it was just a bit too sudden of a drop for my liking. I want to see more price action now to have confidence that the market is kind of reaching consensus at the 10 cent level before I do anything. So that's what I've got to say on that. The next thing I'm going to talk about is Bitcoin Cash. I'm glad I sold the Bitcoin Cash when I did, because if we look at the chart now, Bitcoin Cash against US dollar, here it is. So I'm glad I sold the Bitcoin Cash when I did, because look at this. Let me just turn the volume off because it's going to make a mess. Yikes, it's continued to pull down even further. We're now down 20% from the point at which I sold, which is the bold horizontal dotted line here, which is about $590. We're now at $490, so that's quite a significant drop. Meanwhile, if we look at Poloniex and we look at the split coin futures, Bitcoin SV is up, what, 85% since yesterday, which is the price is almost now on parity with Bitcoin ABC. Not quite. Bitcoin SV is right now $215 and Bitcoin ABC is $269, but that's a significant closing of the gap since the last time we looked at it, right? Now, the split looks like it's still on, but I can't imagine that the people that we looked at when the Bitcoin cash price was booming, I was speculating that was people piling in because they wanted free money. But I can't imagine that they're the same people that are now dumping, because selling before the split means you don't get the split coins. So the sellers that are causing this sell-off, to my mind, have to be a different set of people to the ones that bought in and bid the price up in order to get the free coins. They've got to be two separate groups of people. So that's just my view on that. We're less than 48 hours away from the split. So go to coin.dance for the updated countdown and all that data. A quick update on my XRP trade if you've been following along with this one. So we're going to go back to the charts. We're going to look at XRP USD. Here's the chart we've been looking at. Not too happy about setting this lower high on the previous swing high here. But like I said previously, 200 EMA holding as support, which is the main thing I'm counting on here. Also, like I said yesterday, worst case scenario, this is now a break-even trade. So it's potential for a 45% gain if it comes up to this line here, but with absolutely no risk now. So happy days. That is all I've got for you today. So if you liked this episode, go ahead and hit that like button. If you disliked it, hit the dislike button. Please leave me a comment below with some feedback, and I would very much appreciate it if you would get subscribed. Also, make sure you check out my online store because it has cups, mugs, hats, backpacks, and towels bearing the Cryptoverse branding. I appreciate you doing that because your purchase from the online store will help to keep this channel going. Other than that, I will be back with the next episode of the Cryptoverse. Until then, it's me, Chris Coney, saying bye for now.